Logan says, "Hello, Robert and Austin. My name's Logan and I'm 17 years old. I wanted to start off by giving you guys a big thanks for all that you do. This is so much needed in America today. So my question is, what should I be doing with my money to save up for a house and hopefully buy a business one day?" Here's some background information. I'm currently working as many hours as I possibly can, making about $2,000 a month, and now with summer here, that's going to be able to increase. Currently, I have $30,000 parked in a 12-month CD with the bank, earning about 5.5%. However, that's about to mature, and I want to figure out what to do with that money. I've maxed out my Roth IRA for the last 2 years, and even the year before that, I put $3,000 into it. I have a $17,000 truck that is fully paid off, and I have a motorcycle that's paid off as well. If I need to, I can sell both of these and go buy a cheaper truck to invest even more, but I'm not sure about that one. On top of my CD, I've got $40,000 in other savings accounts. As of now, I'm not planning to go to college. Any advice would be greatly appreciated, especially as I look to buy a house one day and buy a business. Thanks in advance. What an awesome situation, Robert. Let me just say this, as someone who's 29 years old, and I'm looking at Logan here and I'm listening to things that he's saying, it's mind-boggling how different, stark different some people's amount of money that they have at a young age is compared to me. When I was 17, I had about $500 in my checking account. I was lifeguarding at the country club during the summer times, and I was trying to enjoy myself, cut some grass, do whatever, right? But it's I didn't have $40,000 in a savings. I didn't have a paid off truck. It is mind boggling to me how some of these kids now, these teenagers, it's just so different than what it was 10 years ago, 12 years ago when I was a teenager. And I'm sure even, when you were a teenager, Robert, it's just there's so many opportunities now that people who are in their teens, early 20s can go out, earn money, set themselves up for financial success. And it's really inspiring. So here's a couple things I would do for you, Logan, right? The first thing is when your CD finally matures and you can cash out your money, take that $30,000, go open up a public.com brokerage account and put it in there. Get that money invested into the index funds and ETFs we talk about. Specifically, that's the S&P 500, the NASDAQ, VTI, AIQ, VUG, right? Some of these big ETFs that are going to continue to grow over a long period of time. You mentioned the Roth IRA. Congrats on that. Just want to make sure it's getting invested correctly. Same index funds and ETFs we talk about. And the last thing I'll call out here, Robert, is when it comes to this 40,000 in savings, I think that's a lot. I think that's too much in savings,
Way too
to be
much.
honest with you. So if you want to take maybe 15,000 of that, keep it in your savings account. That's awesome. I think 10, maybe 15 grand. But the other, let's call it 25 or 30,000, go put that as well into the public account. Get that invested and working for you more aggressively than call it a 3.5 or 4% rate you might be getting in a savings account right now.
Yeah, I love this. And I want to go back to your original reaction. And I'm glad we opened the episode with this question because Logan is crushing it. I don't know where the money came from. I'm guessing he's been working a lot or he got some inheritance or whatever. But the main point for me, and I preach this every day to my workers, whether it's at the pizza store, the construction company, or wherever, is the sooner you get started thinking like an investor, the better off your life is going to be for decades to come. Because I see it every day and I work on it every day with people I run into where they're 32, 33, 27, and they have zero investments. They don't know what a Roth IRA is. They've heard of cryptocurrency, but only put $100 into it, into some meme coin. Logan is doing it right. So anyone out there that's listening that's under 30 years old and you haven't gotten started yet, this is your wake-up call to get started. Think like an investor. Start getting the Roth IRA set up. Start getting some cryptocurrency purchased through public.com and really lay the groundwork for your future. So that's my take, and I love this question. And then the only thing I would add to what Austin alluded to is I would also, in that public.com account, at 17 years old, you should be risk on. I would get some cryptocurrency going. I would buy some XRP. I would probably buy some Chainlink, Bitcoin, and have a decent sum in cryptocurrency, maybe 5% of your total investable capital. I would do that. And I also agree 100%. You have no need to have $40,000 sitting in savings. I would trim that way back, get that a little more aggressive in some of these funds we've talked about, because then that way this money is going to grow quicker. So when you're ready to buy that first property, let's say after you get your first $100,000 saved and invested, that money can be the money you use to do so. But I love your situation, Logan. I'm so excited when I see younger people ask us these questions. Get engaged in the Rich Habits podcast and in the Rich Habits network, because it means you're taking your money seriously and setting yourself up for the future, and I love it.
And I think the only additional comment I would make is, Logan, I would really encourage you to enjoy your childhood, enjoy your teens and your early 20s, right? It seems like you're working really hard. It seems like you're very much focused on becoming this very wealthy human being. And I hope you achieve that goal, but make sure that you're not trying to achieve that goal at the cost of making memories with your friends, going on vacations with your family, doing kid things, like going back and thinking about when I was 17. Oh man, I would do anything to go be back 17 years old again, right? That'd be so much fun. And I'm sure I'll feel that same way when I'm, 20 years into the future, when I'm 49. Oh, I'd do anything to go be 29 again. I guess a reminder for everyone, like, live in the moment. Don't forget why we do these things. We all invest and have these rich habits and are so strategic with how we're saving and investing our money so that, right? What's the so that? Is it so that you can go spend more time with your family, so that you can go on that vacation, so that you and your spouse can go, whatever, right? Never forget about the so that. And then also, when you specifically mentioned buying a house, buying a business, buy the duplex. Go use the 5% down Fannie Mae mortgage, do a duplex house hack for 2, 3, 4, 5 years. That's going to be the easiest and most cost-effective way, in my opinion, Logan, that you'll be able to build equity in real estate. And then when you're 22, 23, 24, 25, figure out what business do you want to get into? What hard skills and soft skills do you excel at? What specific unique experiences can you use to leverage and build a business, build equity in this business? Perhaps owner's financing is how you're going to be able to buy it. Who knows? But I would first focus on the house, but only after, to Robert's point, you have your base built. Incredible progress, Logan, and we are rooting for you, my friend.